Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday the 24th of April. We've had a fairly mixed handover from the Asian session. Asian markets were held back by a stronger yen. Certainly the Nikkei was down around about 1% from the strengthening of the yen, but equities in Europe are trading higher early on, around about 0.5% higher, and that has come on the back of the strong earnings out from Apple in the States. Apple trading around about 8% higher after hours, following its earnings beat and also hiking the dividend payout as well. So that cheering investors, and certainly with Apple comprising around about almost 3% of the S&P and over 11% of the Nasdaq, that should ensure a positive open on the S&P today. And that is being felt through the European stock markets in the early trading, so that's a positive. Currencies are less so. I suppose you could see there's some dollar weakness going on. The euro slightly higher, sterling also slightly higher. The yen making more of a move, so that's pulling dollar yen lower, and a bigger move in New Zealand Kiwi dollar as well on the back of the rate hike that we saw from the Reserve Bank of New Zealand, up to 3%, 25 basis point rate hike there. The key events that we need to be watching out for today: German IFO business climate, that's coming out at 9 o'clock UK time. That's expected to come in at 110.5, which is just around about where it was last month. But then we're moving into the US trading, where at 1:30 you've got the jobless claims, and that is expected to come out at around about 310. So that's picking up back off this 300 level. That couple of weeks ago we saw 300, which was the lowest since 2007, and 304 last week. So back up to 310, but still, you can certainly see that these jobless claims are improving all the time, and the number is expected to just rise slightly to 310, but anywhere around 300 is generally considered to be a positive number, certainly for these jobless claims. You've also got the durable goods out at the same time, expected to come back slightly to 2.0% from 2.2% last month. I'll show you the dollar index quickly. That is I said that yesterday it was back in decline again. This was the recovery that we'd seen in the past week or so. It's now falling over and continues to back away from that 80 level, which is a bit of a resistance, and it suggests that dollar recovery has certainly lost momentum and beginning to reverse once more. So something to be mindful of there. With that in mind, also, my chart of the day is the dollar Swiss, and dollar Swiss has, as the dollar rallied, had that move back higher, but this in this big downtrend still. All these moving averages are falling, and this is on the daily chart back over the past year, and it just looks as though this recovery has just been another chance to sell. The momentum indicators remain fairly negative, and it's turning it lower once more. On the intraday chart, you're in this uptrend, and you would argue the trend is your friend. However, you would certainly say that pressure is being put on this uptrend now, and these moving averages on the hourly chart. This is I'm going to highlight the 89-hour moving average, which certainly seems to have been a basis of support. Got broken there slightly, but resumed its basis of support throughout the last few days, but then has turned down, and now looks to be coming at the basis of resistance as well. 88.37 was the reaction high yesterday, and I think that is now going to be a lower high in place, certainly following on from the 61 and the 88.53 mark that we saw over the past couple of days. So 88.37 is the reaction high, and I think anything, any sort of reaction to the upside today, intraday, back towards that sort of level, should be used as a chance to sell. I think that 89-hour moving average is at 88.35, and I think further pressure will be made on this recovery uptrend. You've got these moving averages, as I said, rolling over, but also the momentum indicators as well. Slight bearish divergence there, but certainly the RSI turning into sort of more negative configuration there, pushing on this oversold territory and just falling over around about that 50 level once more. The MACD lines are more negative throughout the uptrend. You were in this nice positive configuration with the lines consistently above neutral. You've now fallen over underneath neutral, which is a negative line, negative configuration on the MACD, and also the stochastics falling away as well. So certainly the pressure is to the downside, I think, on this chart, and I think any sort of bounce intraday should be used as a chance to sell. You've got a nice couple of resistances here, 88.53 and 88.61 are the two levels here. So yeah, I think any sort of recovery on dollar Swiss today is a chance to sell. So that's my outlook, and I wish you good luck in your trading today, and I will speak to you later. Thank you.